It's Wednesday, the 15th of June, 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories to get through in 5 minutes. But story number 1, it was an extraordinary day yesterday. There was really nowhere to hide for investors. A major sell-off across several asset classes meant plenty of people lost plenty of money.
Exactly right. There were very few investments which didn't suffer yesterday. Equities tumbled, bonds tumbled, cryptos tumbled. The Aussie dollar fell back below 70 US cents. In fact, unless you had money in the bank, you were probably losing it yesterday. Now, the reason for all this carnage is fears of a recession in the US and other economies, including Australia. Inflation is out of control in many economies. It's at a 40-year high in the US, for example. The fear is that central banks around the world will have to sharply hike interest rates, including in Australia, and that will slow economies fast. Rates will rise so much that economies will head into recession, and that sentiment is driving markets. The S&P ASX 200 closed the day down 3.5% yesterday, or a little over that, to 6,686 points, though at one stage was down nearly 5%. It was the biggest one-day sell-off since March 2020, and about $82 billion in value was lost from the market. Bond markets are supposed to offer a safe haven when equity is being sold off. Not now. Investors fear much higher interest rates, and that will hurt bonds. Bond markets are really well known for predicting interest rates. If that's the case, our mortgage rates are going to be a lot higher in 12 months' time or thereabouts. No good news in local financial markets yesterday.
All right, big day. Now, story number 2 is linked to story number 1. The Aussie dollar is back below 70 US cents, Sean.
Yeah, the whole currency market has been tipped on its head a bit. The Aussie dollar is currently around 69.5 US cents, perhaps a little higher than that. That's mostly to do with the strength in the greenback. In times of uncertainty, investors flock to US dollar investments, and that's created massive demand for that currency. In fact, the US dollar hit a 20-year high yesterday against a bunch of currencies. By comparison, the Aussie dollar isn't looking too bad, but it's back down below that 70 US cents mark. Also need to mention cryptos. The slide in cryptos continued, with Bitcoin tumbling below 21,000 US dollars a unit. Other tokens, including Ether and Avalanche, also fell. The global market for cryptos is estimated to have fallen below $1 trillion US dollars. Digital currencies have lost favour as interest rates have risen. Simple as that. Crypto lender Celsius, one of the biggest marketplaces, froze withdrawals early this week. That put more pressure on the market. Crazy times in cryptos.
Yeah, sure is. Story number 3, Sean, is probably good news if you're a property investor, not so good if you're a renter. Residential rents have jumped to record levels across most capitals in the past 12 months. This is really as strong demand is outpacing supply.
In some suburbs, such as Docklands and Southbank in Melbourne, prices are up nearly 30%, according to CoreLogic. And there's little relief in sight, given immigration will pick up during the rest of this year, adding to demand. Unit rents are likely to rise faster than house rents because of affordability factors. Now, in the past 12 months, rents across Sydney, Perth, Canberra and Hobart jumped by about 9%. Brisbane was at 12%, Adelaide at 10% and Melbourne at 7%.
Story number 4, Sean, plenty of talk over the last couple of days about the energy crisis that we are in the middle of, and the Energy Minister Chris Bowen was pretty confident yesterday that the East Coast could avoid blackouts.
Yes, he was. Now, the Australian energy market operator has used emergency powers to force generators to pump more electricity into the network over the past 48 hours to avoid supply shortages in New South Wales and Queensland. Households in both states were being asked to conserve energy. While Mr. Bowen was confident, the regulator actually came out yesterday afternoon and once again warned of potential blackouts. Price caps for wholesale electricity prices remain in place in Queensland, New South Wales, Victoria and South Australia. They're the problem states. Now, federal legislation allows for cost recovery by generators that are creating unprofitable electricity. As we mentioned yesterday, there's a demand-supply imbalance. Plenty of demand due to the cold snap, reduced supply due to breakdowns and maintenance at power stations.
All right, last one, Sean, and I love this story. There are probably very few vehicles, at least in a public transport sense, that are as iconic as London's double-decker buses. Now, an Aussie company, our biggest bus operator, has bid to take over the company that runs the double-deckers in London.
It has. Kinetic Group is part of a consortium that has made a $1 billion bid for Britain's Go-Ahead Group, according to the Financial Review. Kinetic already owns buses in Australia and New Zealand, including Melbourne's Skybus service, and if successful, will add fleets in the UK, Ireland, Singapore, and rail services in the UK, Norway, and Germany. Now, the deal is no certainty because there's an alternate bidder, and that's another Australian company, Adelaide-based Kelsian, which is listed on the ASX. If someone gets it, an Aussie will own London's double-decker buses.
That's fantastic. Great story, that one. That's it, the top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 15th of June, 2022. Remember to hit follow on the podcast, and if 5 minutes isn't quite enough for you, if you want something a bit longer, you can find our longer daily show called Fear and Greed on your podcast platform. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.